Aave is a DeFi protocol that allows users to lend and borrow cryptocurrencies without relying on traditional banks or financial institutions. Built on the Ethereum blockchain, Aave is one of the leading DeFi platforms, offering innovative features and a high level of transparency. Before diving into how Aave works, it's important to understand what DeFi lending and borrowing mean. In traditional finance, banks act as intermediaries. Depositors lend money to the bank, and the bank loans that money to others, charging interest. In return, depositors earn a small interest rate. In DeFi, protocols like Aave cut out the middleman. Users lend their crypto directly into smart contracts, which is self-executing programs on the blockchain, and earn interest from borrowers. Borrowers, in turn, can take out loans by locking up collateral in the form of other cryptocurrencies. Everything is handled by code, not humans. Aave operates through a system of liquidity pools. Here's how the process works. Lenders deposit cryptocurrency into these pools. Borrowers can take loans from these pools, but they must first deposit collateral. The protocol charges interest on loans, and a portion of that interest is given to the lenders as a reward. Everything runs on smart contracts, so there's no need for credit checks or a centralized authority. Instead, risk is managed through over-collateralization. Borrowers must deposit more than they borrow to protect lenders in case the value of the collateral drops. For example, to borrow $100 worth of a token, a user might need to deposit $150 worth of another crypto asset. Aave also has its own native cryptocurrency token called Aave. This token plays several important roles, such as governance. Aave holders can vote on changes to the protocol, such as new features or risk parameters. Staking. Users can stake their Aave tokens in a safety module that acts as a kind of insurance pool. In return, they earn rewards, fee reductions, and incentives. In some cases, Aave holders can receive discounts on fees or improved borrowing terms. Aave stands out in the DeFi space for its wide array of innovative features, such as flash loans. These are loans that must be borrowed and repaid in a single blockchain transaction. They are primarily used by developers for arbitrage, refinancing, or collateral swapping, all without needing upfront capital. While risky for beginners, they showcase the flexibility of DeFi. Interest rate switching. Borrowers can switch between stable and variable interest rates to manage their risk, depending on market conditions. Collateral swapping. Users can swap the assets they've deposited as collateral, which can be useful during periods of market volatility. Multiple networks. Although originally launched on Ethereum, Aave now also supports networks like Polygon and Avalanche, allowing for faster and cheaper transactions. Aave has undergone multiple audits and is considered one of the more secure DeFi platforms. However, like all DeFi protocols, it is not without risks. Here are some of them. Smart contract bugs. If there's a vulnerability in the code, it could be exploited by hackers. Volatility. The value of collateral can drop quickly, leading to liquidations. Regulatory uncertainty. As DeFi grows, it may attract more scrutiny from regulators, potentially impacting how platforms like Aave operate. Aave is attractive for several types of users, such as lenders. Lenders earn passive income on their crypto holdings. Borrowers. Borrowers can get liquidity without selling their assets, useful for tax reasons or if they expect the value of their collateral to rise. Developers. Developers use tools like flash loans to build complex DeFi strategies. Aave is a powerful tool in the world of decentralized finance, enabling people to lend, borrow, and earn interest without traditional banks. With its strong reputation, unique features, and active community, it has become a cornerstone of the DeFi ecosystem. While it comes with some risks, its potential to reshape how we think about finance is enormous. That is all for today's video. Don't forget to like and subscribe, and we will see you in the next one.